Okay, so guys, how are you? We are going to start CVP analysis, the next chapter of ACCA F5. From this chapter, we are going to start the short-term decision making part. This part is basically the largest, the longest part because it is having a lot of chapters as well as the MCQs and MTQs technicalities are there in it. So before that, we have completed the costing portion in which we have done activity-based costing, target costing, life cycle costing, and throughput accounting. The last topic of this portion, costing, is environmental accounting, and that environmental accounting usually I teach at the end of the syllabus. So you are supposed to cover these all chapters we have done in costing, the practice of that, and as you know that the CR question will not come from this part, this portion CR will be not tested. So for that purpose, you are not supposed to do any CR for that. Only do MCQs, do MTQs from this portion. So you are you must do the complete practice before starting this second portion, that is short-term decision making. The first chapter is CVP analysis, and it's like cost, volume, profit analysis. First, we have to understand the term cost, volume, profit. Volume means obviously units that are being produced or sold in the business. So we have to analyze, because it's the analysis chapter. So we have to analyze the relationship between cost, units, and profit, in which we have first topic, break even analysis. How we will analyze it, obviously we'll see in break even analysis, and further topics obviously will start that as well. So break even analysis, let us start break even analysis. Break even, the definition is written that it's the study on effects on profits, study of effects on profit due to change in fixed cost, variable cost, or sales price. As you know, obviously, every business is facing a huge fixed cost. Obviously, if it's facing the huge fixed cost, so first target of that business is to cover that fixed cost. So if the fixed cost is covered, soon obviously the business will be able to earn the profit. As you know that at zero units, even at the zero units, business is having some cost, that is fixed cost of that business. So business must cover this fixed cost first to reach the profit level. So we have to study that effects in break-even analysis, in which we have first point, that is known as break-even point. If you are from the foundation level, for example, you have done MA2, we have studied that topic there as well. But if you have done that, obviously we'll study from the basic level and no need to worry about that. So break even point, what is break even point? I've written three definitions for that. The point at which there is no profit, no loss. Sometimes students think that this is the point and at which we sell no units, but it's the wrong statement. Because if, for example, you are selling no units, you have sold zero units, so at this point you can't say that your profit and loss is same, or sorry, zero. You can't say that your profit and loss is zero. No, it's a wrong statement. Actually, when you are selling zero units, no units you have sold, still you have shops, you have factory, you have salaries to be obviously given to the your managers. So you are having a lot of fixed cost at that point. Even you are not selling the units, your business have to incur the fixed cost obviously to run the business. So when you sell units, and with the passage of time, for example, you sold 100 units, now you know that this fixed cost is being covered. This fixed cost is being covered. And with the passage of time, obviously that fixed cost will be covered completely and you will obviously convert it to profit. But at this point, when you have sold nothing, your units are zero, the sales units are zero. At this point, business has a loss that is equal to the fixed cost of business. I am going to make the statement to make it more clear. See, sales, if you are selling zero units, sales is zero. Cost of sales, obviously zero. Cost of sales means that how much obviously you have incurred to make that unit or to buy that unit. So you, if you haven't sold the unit, obviously you haven't made that. But gross profit will also be 0. After that, expenses in which there is also fixed cost, in which there are also fixed cost. If you assume this fixed cost to be 500, that will be irrespective of the unit sold, you have to incur that. So your loss will be 500. So at the point when you are selling nothing, your fixed cost is the loss. The entire loss of the business will be the fixed cost of that business. But obviously, as I have told that when you will be selling more and more units, this loss will be recovered. And for example, at 100 units, still there is a loss. For example, at 200, still there is a loss. For example, just for an example, at 300, you come to know that at this point, your loss is recovered. At 300, at this point your loss is recovered, means at this point you are not earning the profit, as well as you are not incurring any loss. So profit and loss becomes zero at this point, assuming, just I'm assuming 300 units. This point is known as break even point, at which the loss is recovered. The second definition is like proved, point at which your the loss is recovered. And one thing I've written here, that at the point at which your contribution is equal to fixed cost, your contribution is equal to fixed cost, this is also the break even point. Let me prove it as well. See, you know that if you are making the statements, you know that sales minus variable cost, from basic knowledge, obviously from the knowledge level, the basic level, you have gone through these types of formulas. Sales minus variable cost, if we deduct all variable cost from the sales, you get contribution, right? And out of this contribution, you deduct the fixed cost if you want to calculate the net profit of the business. Assuming the sales are 1500 and the variable cost, just assume it's like 800. So deducting this variable cost from the sales, you will get the contribution of 700, contribution of the 700. But this is the income from which we have to incur fixed cost as well. Contribution is something that from which we have to incur fixed cost first to earn the to calculate the profit. So if your fixed cost is same as contribution, like if it's 700, same as the contribution, your profit will be 0. So what I have told you, that break even point, at the point at which profit is 0, it will be 0 if your contribution and fixed cost are same. In the case if the fixed cost is less, you will earn the profit, and if the fixed cost is higher, you will obviously face a loss. So at this point, contribution is equal to fixed cost. This is just a like small point you can face in MCQs, so you must be known about that. After this point, only the business will chill. Only the business will chill, because obviously after that point there is no chances of loss, because you have just covered all the difficult part, that was the fixed cost, and you have just obviously overcome that. Now we are going to start the calculations for that, because in the exam there are three portions in which it can be tested. CVP can be tested in the MCQs, MTQs, and CR as well. From now onwards, obviously my practice will include the Excel practice, like CR long question practice as well, because it's important. And F5, as students know, that there are a lot of technical topics, so you are supposed to do a very good practice for that. For F5, very good practice is required. If you are not going through the practice, you are not going through the Excel practice, and you are not focusing the time you are taking to do the CR before the exam, obviously it will be hectic for you to pass the exam. So let us start the calculation of break even. Now we are basically going to find that point through the calculation, because every business must know that at which point they are like reaching the point at which there is no profit, no loss, because after that obviously that business will earn the profit. Okay, so calculation of break even point, I've written here break even point in units. How we'll calculate the break even point in units? The formula for it will be total fixed cost divided by contribution per unit. Total fixed cost divided by contribution per unit. I'm just writing a small example here just for your understanding. For example, a business have a total fixed cost. Business has a total fixed cost of 50,000, and you know that selling price for that business, the selling price for the unit is 100, and the variable cost including every variable, a variable non-production production, no need to like separate them. Complete variable cost business have is $40. So let us calculate break even point in units. In units, we'll know that if the business will sell this number of units, the business will be reaching the break even point. So fixed cost in the numerator 50,000 divided by 60. 60 why? Because contribution per unit, the formula will be selling price minus variable cost per unit. So I've just deducted the variable cost 40 from 100, resulting in the 60 of contribution. Let us calculate that 50,000 divided by 60 will be 833 units. Almost 833 units. These are the units that business will sell, and when business will sell this number of units 833, it will reach the break even point, means the point at which the loss is recovered and now the business profit loss is zero. So every business first obviously make the target to reach break even. After that, there is a second target to sell more than break even. Obviously, they are available to like earn the profit, not for the break even. But first target is to like just recover the loss, reach the break even, and then earn the profit as much the business can. So this was the answer in unit, break even in units. But in exam, only the testing of units is not there. There can be the testing in revenue as well. Like they can ask you what is the break even point in revenue. What is a break even point in revenue? We can calculate that as well. Let us do the calculation for that. I'm taking the same question here. We can take the same question here. No issue in that. Okay. So here the formula is total fixed cost. We know that break even in revenue. Now it's not the break even in units. It's a break even in revenue in dollars. Means this dollars sales will do to reach the break even. So break even in dollars means you can calculate by taking 50,000 in numerator divided by contribution to sales ratio. Now we have to understand this point. Contribution to sales ratio, by its name you can understand, by its name contribution to sales mean contribution up and sales down. Just calculate this ratio. Just calculate this ratio. If you are having total contribution in the question, if for example you are having some total contribution, they've given you total contribution in the question, then take total sales in denominator, add down. Like if upward value is total, downward will be total. But if contribution you are using per unit, like if you are having per unit contribution, as in this question we can calculate per unit contribution 100 minus 40. If you are using here per unit, then at down you will use not the sales, not the total sales, you will use the selling price per unit. So to calculate the contribution to sales, so both of the values should be either total or per unit, right? So contribution per unit is 100 minus 40 is 60. We'll take it to the numerator, divided by selling price is 100. Means your contribution to sales ratio is 0.6. This contribution to sales ratio individually can be tested in the exam. He can ask you what is the contribution to sales ratio. So you must be aware of that. Obviously, we'll use in the denominator 0.6. Now you will get the answer, but now in dollars. 50,000 divided by 0.6, it's dollar 833 tetra 3 basically. $8333. But this answer is in dollars. This was in the units and this is in the dollars. So he can ask you which the examiner wants. He can ask you about like in units and dollars. So you are supposed to give the proper answer for that. This is the point. This is the point when the business basically at the business, when the business will do this sale, $83,333 sales, this business will reach break even point. And we know that break even point again at which profit loss is zero. So business has to sell more than this, like more than 8333, more than this sale should be done to earn the profit. Because again, if I say business is not there to earn break even, they are obviously available to earn the profit, like sell more than the break even point. Now there is one formula, one extra formula for with from that is derived from the CVP is target profit formula with target profit. For example, if managers decided to earn profit of 50,000. For example, just I'm giving the example, they want to earn the profit of 50,000. Now they want that how many units we sell, so that we can also earn that profit. We have understood the formula in which we have seen that how many units we sell to reach the break-even point. But can we make that type of formula like in which we are able to like calculate how many units we must sell to earn any profit of XYZ value, like I have written here 50,000. So there is a formula if you want to like understand, like in the exam in the exam it can be tested that it is where the target profit, the formula is it's the same as the break even total fixed cost divided by contribution per unit. Just what you have to do is to add target profit here with a fixed cost. Just add that target profit. Just I'm giving the example, the same question from upward. See, total fixed cost was 50,000. We'll write here $50,000 plus target profit. Why I'm adding that? I'll explain just 2 minutes. Target profit 50,000 divided by contribution per unit was 60. Now it's 100,000 divided by 60 will be 1667 units. It means that business must sell 1667 units if they want to earn the profit of 50,000. Because the game is not to reach the break even point, the game is to earn the profit, and profit of 50,000 can be earned if the business is selling 1667 units. So in case of target profit, just add this profit to the fixed cost. Same in the revenue case, if they want you to calculate the target profit and revenue, the formula will be same for the break even fixed cost. Just add here target profit divided by obviously in revenue. So in denominator, no contribution per unit. You have to write contribution to sales ratio. Is that clear, students? Okay, so now we have done with the break-even point in revenue, with the target profit in the units. The next topic we're going to start is margin of safety. Margin of safety. First, we'll understand the concept, then we'll do the practice. Right. So, for example, you have sold nothing, like you are at the 0 point, 0 units you have sold. But obviously, with the passage of time, you are like selling units and you have just reached the break-even point. For example, it's 500 units. The point at which your profit loss will be zero. The point at which your profit loss will be zero. So after that, obviously, you will not, that's not your target. It's not your final goal to reach 500 units. It's just a like the first target. And after that, we'll earn the profit. After that, business with the passage of time, like sold more units. And now at the end of the month, the business was able to sell 1200 units. Like it's the total sales 1200 units. So what is margin of safety? Actually, the units you have sold above break even point is the margin of safety. I'm going to highlight that point as well, this point, this complete line from 500 units to 1200 units. This is the margin of safety, because it's the obviously actually it's the margin of safety, because you're safe above 500 units. And the more the margin means that you are a lot ahead from this break even point. So formula will be, the formula for break even for the margin of safety will be total budgeted sales units. Total means budgeted sales units means basically it's the total units 1200 minus break even sales units was 500. So we'll say that our margin of safety is 700 units. It means that if you are not able to sell this 700 units, you will again reach your break even point back, and again you can, there is a like risk of loss you can incur. So you need to increase that margin so that you are like a lot ahead from this break even point. So 700 units is in units, you can say 700 units. But if in again in the revenue, just like break even point, we have done with the units and revenue as well. So in revenue, you have to use budgeted sales minus break even sales. But in revenue, like if the revenue is $12,000 minus break even sale is 5 $2,000. In dollars, I'm saying basically. So in dollars, we'll write it's $7,000 is the margin of safety in revenue. So you have to calculate it obviously on monthly basis to take the decision making that whether you have to increase that total sales, because if you are like just just 100 units ahead from this break even point, there is a risk that if this 100 is not sold, you can again come back to the break even, or even you can go to the loss point, and which you don't want obviously. So you must obviously always do the actions, the specific actions to reach ahead, a lot ahead from the break even point. Like if you are selling 1200, the next target should the 1500 units, like 2000 units, so that you are away from this break even point. There is a question that you have to do first. First you will do, then I will do that. Just start this question. Everyone should do this question. Everyone should do this question. Calculate the margin of safety in units. Margin of safety in units. Okay, so let me calculate that. If you haven't calculated till now, just pause the video first, do this question by yourself, then see the solutions. So margin of safety in units, we know the formula is budgeted sales, like complete sales you have done in the period minus break even sales. And as I've told you to calculate in units, so no need to calculate the dollars of budgeted sales and all that. You already have the sales in units. So you have done 1700 sales in units and this month, minus you have to calculate break even sales. For this break even sales, just I'm going to find the answer to the formula that I know. Break even point is total fixed cost divided by contribution per unit. Contribution per fixed cost is 20,000. This is written, divided by contribution is selling price minus variable cost is 20, like 50 minus 30 will be 20, so it's 1000 break even sales units. So I'll deduct this 1000 units from total sales and resulting in the margin of safety in units of 700 units. So this company is obviously selling more like from the break even point to the total sales, the difference is basically 700 units, and it should be more with the passage of time so that there is a lot of margin, or that there is no risk of loss. Sometimes they ask you the margin of safety in percentage as well. So if any in any question you see margin of safety in percentage, what will be the formula in that case? Just simple. The answer of margin of safety, just take that answer divided by budgeted sales into 100. If in any case they ask you margin of safety in percentage, so margin of safety divided by budgeted sales, because budgeted sales is the base. Budgeted sales is the base in this question. For example, why I'm saying the base, for example, base is obviously 100%, and assuming margin of safety is 20%. So it means break-even sales will be 80%. I am taking this as 100% because it is the base, and base is always 100%. So that's why I've written here margin of safety divided by base. The real base is budgeted sales. Out of that budgeted sales, basically 20% of this budgeted sales in this scenario, I'm just telling the example, just the example, that 20% of that budgeted sales will be the margin of safety. So in this case, we have to calculate that percentage margin of safety divided by budgeted sales into 100. Margin of safety is 700 divided by budget sales is 1700 multiply 100. So 700 divided by 1700 into 100, it's 41.2%. 41.2% is margin of safety in percentage. He can ask you in percentage as well as the question I have given here. The second question you have to do, I'm just reading it. The company manufactures the product rupees RS. Each unit RS sells for 100. This is selling price, variable cost 60, fixed cost 250,000. Company budgets to produce 12,000 units next period. First, you have to calculate break-even point in units and dollars both. Then the level of activity required to generate the profit of 90,000 again in units and dollars. And last, margin of safety as percentage. So just do it. You have just 2 to 3 minutes, 4 minutes to do this question. Be fast, be fast. Then I'll do that. Then I'll do that. Okay, so students, have you calculated it? If you haven't, just pause the video, do the question first, then continue the video. So break even point in units. Break even point in units. Okay, total fixed cost. Total fixed cost is 250,000 divided by contribution per unit. Contribution is 100 minus 60, 40. 250,000 divided by 40, it will be 6250 units. 6250 units, it's in units. Now he's asking also in revenue. I have told you one formula, fixed cost divided by contribution to sales ratio, right? The first formula we have just discussed in break even in revenue, but there is one shortcut as well. What you can do if you want to calculate the answer in break even in revenue, just take the answer of break even in units and just multiply by selling price. See, 6250 units, we know that break even units were 6250 units. Take this units, just multiply with the selling price, that was 100. That was 100. Just multiply it with 100, it will be $625,000. You can do by this way as well. If you want to calculate break even in revenue, you can take the answer of break even in units, multiply the selling price because you need the sales value, and sales value will be the units multiply selling price. Simple. So break even in revenue we have calculated. Okay. Now, uh, the second part is with the profit. If they want to earn 90,000 profit, simple. Fixed cost 250,000 plus profit 90,000 divided by contribution per unit, again the same 40. So now it's 340,000 divided by 40 will be 8,500 units. In the units, they have to sell 8,500 units to reach the profit of 90,000. And in case they want break even in revenue, just multiply this 8,500 with the selling price 100. That will be $850. $850,000, 850,000. So it's the question with the profit. And if margin of safety, they're asking margin of safety, then budget sales minus break-even sales. Now, sometimes students ask me that this margin of safety in percentage we have to calculate. So will we take the margin of safety in units values or margin of safety in revenue values? So you can take anyone. You can take the data from any side. Like if you have calculated in units, you can use that data. If you have done through the revenue, like margin of safety in revenue you have calculated, you can use that data. Answer in percentage will be same. So we're just using the units because we have having the data like that. So budgeted sales, if this, you see that the budgeted sales is 12,000 units budgeted sales, because they have seen that the company budget to produce 12,000 units in the next period, means they want to sell that. Minus break even sales was 6250, if you remember, 6250 units. So 12,000 minus 6250, it's 5750 units. It's 5750 margin of safety units. It's 5750 margin of safety units. And margin of safety in ratio in percentage, you can calculate margin of safety in numerator divided by budgeted sales 12,000 multiply 100, divided by 12,000 multiply 100, 47.92. 47.92% margin of safety in percentage. You have got the answer. You have got the answer. Is that okay till here? Is that okay till here? Now, we are having some graphs, like simple break-even graph, contribution break-even graph, and like three types of graph we have to do. First of all, we are having simple break-even graph in which we'll obviously like find the point of break even in the graph. But one thing, graph will not come in exam to prepare. Like you will not have to prepare this graph in exam. Just you have to, you must have the understanding of the graph, because it can come in the diagram shape, because you don't have to make the diagram. They will be obviously available. The diagram will be available in the exam. You have to identify the points. You have to, must have the understanding of that. So in the graph, obviously x-axis I have written, on the x-axis units, on y-axis I have written dollars. On y-axis I have written dollars. Okay. Now I am going to make the graph. Now I am going to make the graph. Simple break-even graph I am going to start. Simple break-even graph I am going to start. Simple break-even graph I am going to start. Okay. First of all, on this graph, I'm going to make the line of fixed cost. We know that fixed cost line is just a straight line like this. Fixed cost line is just a straight line on the graph, and I can indicate it like fixed cost. First, I've made the fixed cost line. After that, I will make variable cost. Variable cost, if you know variable cost on the knowledge level, basic level, we know that variable cost line is like directly proportional straight line upward like this. Because obviously in F2, in MA basic level, we know that fixed cost straight line, variable cost starting from zero. But if we have to make the both for both, we make like this one, right? So this point, from this point to this point, it will be variable cost. And we know that business have basically these two types of cost, fixed cost and variable cost. Adding both of them, this complete obviously region will be total cost region. Complete region means this all region. I am going to indicate you that as well, like this complete region, this complete region will be obviously including fixed and variable, both we can say it's total cost. Obviously we can say it's total cost. Now what I'm going to do now is the main thing. Now I'm going to make the sales line with this red color. Just see from the 0 point, obviously when we'll sell from the 0 point it started, and if you know that the sale is going upward, upward, and there will be one point here. I've stopped here. Then this is the point at which you see the sales line like intersecting the coastline. This point is basically the break even point, and after that you earn the profit. Why this point is break even point? Why this point is break even point? Because we know that break even point is the point where sales is equal to total cost, because sales and total cost, the point at which profit loss will be zero. The sales, and if there is a sales that is equal to total cost, the profit will be zero. So according to the graph, this is the break even point at which this sales line intersected the total cost line. And obviously after this point, we'll say that it's profit to the business. There's a profit that business is earning. And before, it's a loss, because before the break even, it's all the loss, and after break even, it's a profit. So we can say it is the profit. And this complete ahead line is like the sales line. The difference is the profit, because it's variable cost plus fixed cost is the total cost. And if you see this point, upward point, this is a sales point. So sales minus total cost, sales minus total cost, this portion will be known as profit. And before the break even point, obviously business is having the loss. Now, if you are like just viewing the x-axis according to this point, like you are viewing downwards. So this point will say it's break even in units. Which point? Again, I'm going to tell you this point. The point downwards to the x axis will be the break even in units, and for to here it will be break even in revenue, because on y axis we have used the dollar, and x axis we have used the units. So I can say almost like this point, just to make that point this point. This point is like we'll say break even in units. And if you are going towards this point, almost this point, I'm like just not making using the scale, and no need to be worried about that, because obviously you don't need to make this diagram, just understand the concept. This point is break even in revenue, break even in revenue. And obviously, if you see this point, this total sales point that I mentioned black in with the black color, if you come downwards, so the total sales will be this point in units, and from here to this point almost, this is a total sales in dollars. The point of total sales I have just mentioned on x-axis and y-axis. Why I have mentioned, to tell you something, that this total sales minus break-even sales. We know that total sales minus break-even sales is margin of safety. So this portion is margin of safety. This line starting from here to here, this is margin of safety, and on x-axis it's margin of safety in units. But on the y-axis, if you see the sales point and here the break-even point, the difference between it will be margin of safety but in revenue, margin of safety but in revenue. So you must be able to read the graph to understand the graph. It can come in MCQs, MTQs, or even CR. They can ask you the implication, the knowledge of the graph, what graph is representing, representation of the graph. You have to obviously you must be able to describe that. It's just the free marks. It's very easy, very basic concept. After that, we have second graph. We have second graph, that is contribution break even graph. That is contribution break even graph. First was a simple break even graph. Second one is the contribution break even graph. Let us make that as well. In contribution break even graph, what you will do, you will first make the variable cost line like this one, like I am making now. This is the variable cost line. This is the variable cost line. This is the variable cost line. Just 2 minutes. Okay. So first you will make the variable cost line. After that, we have to make the fixed cost line, because we have to mention the total cost for that variable and fixed total. We have to like both we have to mention on the graph. So variable cost. Now I am going to make the fixed cost. Some student says the fixed cost line will be like this, but it's not like this. We'll make the fixed cost line like, wait a minute. This line is fixed cost line. Now you are like, why fixed cost line is going upward? Even we have studied the fixed cost line is straight. Like we have done here, like for example, a straight line. Why it's not straight here? Why? Because obviously it's a fixed line. I'm going to prove that. See, For example, business fixed cost is 2000. We have started from 2000 and now we have just made the line with by taking the base at a base of variable cost. Why? Because this portion, this complete portion, variable cost has taken. This complete portion variable cost is taken. We have to make the fixed cost line like above the variable cost. So above the variable cost we can make the line by by the same difference over the activity. Like if you see the difference here, it will be 2000. Here the difference will be 2000. Here the difference will be 2000 because the difference between variable cost and that total the fixed cost line is same. So it's fixed cost because we are considering that this variable cost line is base. You can't consider this line as a base, this line as a base because variable cost is already plotted on the graph. So in this graph, contribution break-even graph, your fixed cost line is like upward, not straight as in this only fixed cost graph. So this is a fixed cost. We'll mention it. It's a variable cost. It's fixed cost. And we know that variable cost plus fixed cost, it's total cost. It's total cost. Again, the same concept as we have done above. Just we'll take the 0 point and make the sales line. We know that sales start from 0, and with the passage of time, it increases, and there is some point from where the sales point and the cost line intersect. This point is obviously again break even point. But why we have made this graph if simple break even graph is working? What was the logic behind making contribution break even graph? There is some logic behind that. We'll understand it. First, let me complete the graph. So before break even graph, there is a loss. After break even graph, there is a profit, right? And again, fixed cost and variable cost, adding both of them will be the total cost. This point is the sales, and sales minus total cost is the profit that I have mentioned. Again, to the x-axis, there is a break-even point in units, same as above, same, totally same. And here, for example, this is the point, break-even point in revenue. And if it's the total sales here, so difference between the total sales and break-even sales, this will be margin of safety in units. And here it's margin of safety in revenue. Margin of safety in revenue. Now, why we have made this type of graph if the simple break-even graph is working? There is no issue in simple break-even graph, but why we are making, because this graph name, if you see the name, it's written contribution break-even graph. Means in this graph, you will be easily identifying the contribution part. You can easily identify the contribution part. How? See, you know that sales till now knowledge you have used like sales minus variable cost is contribution. Confirm? But now I'm going to tell you one more formula for contribution at F5 level. You know that contribution minus fixed cost is profit. Contribution minus fixed cost is profit. If you take this profit to the second to the other side, contribution formula will be profit plus fixed cost. So this is another formula for contribution, that is fixed cost plus profit. Like only sales minus variable cost is not the formula of contribution. One more formula we have understood today is fixed cost plus profit. Now, if you see the graph, if you see the graph now, there are fixed cost and profit like with each other, and you can identify easily like fixed cost plus profit, fixed cost plus profit. You can add both of them and you can say these both, adding both of them will result in the contribution. Adding both of them, contribute fixed cost plus profit, it will result in the contribution. So in this graph you can't identify the contribution graphically. By obviously you can add fixed cost plus profit, you can get the answer, but graphically you are not able to like plot the contribution like at the fixed cost and profit with each other. Here is a variable cost behind between them, so you can't like identify the contribution directly. But in this graph you can easily identify contribution because fixed cost plus profit is contribution. That's why this graph is being made in the chapter. So we have two graphs done, simple break-even graph and contribution break-even graph. Again, the diagram will not come to prepare. You have to understand the knowledge, because in F5 I'll make the graphs. In the next chapter there are also very important graphs. Now obviously in this chapter we have more graphs as well with the multi-product break-even analysis. You don't need to worry about making the graphs, how we'll make, will we have to do the question on the computer, how we'll make the graph. No graph paper will be provided, just you have to understand the graph. Just you have to understand the story behind the graph, the logic behind the graph. You have to discuss on that, not to make that, right? Next, we are going to start profit volume graph, the last graph of simple single product break-even analysis. After that, we have next topic as well, multi-product break-even analysis. That's the next topic we'll do in the next lecture. In the today's last topic is the profit volume graph. Let us start that. Okay, so students, we're going to make the profit volume graph. In the profit volume graph, if you see, I have made x-axis units I have mentioned on x-axis, and on y-axis, I have written profit as well as loss. Not like only the y-axis, y positive and y negative. Both dimensions I have made for the profits and loss. Now we are going to make something on that, and again we'll calculate. We'll find the point at which we reach the break even. So if you see, if you know that at the start of the lecture I have told you that when you sell nothing, your loss is equal to the fixed cost of business. For example, a business has a fixed cost of 1000, and that business sells nothing. So obviously the loss at that point will be 1000, because loss is equal to the fixed cost at 0 point. So this is the point. If you see, I have made the point, this 1000, this 1000 is the point, this 1000 is the point, the loss, the maximum loss that will be the business will be facing when it sells nothing. But when the business will sell some units, like for example it sells 100 units, now it sells 100 units. If you see the x-axis upward, 100 units it is sold, so this loss will be recovered. At 200 the loss will be recovered more, then at 300 loss will be recovered more, and with the passage of time this loss will be recovered, this loss will be recovered. See the y-axis, see the y negative axis, this loss is being recovered. It comes from 1000 to minus 800, then minus 600, then minus 400, then minus 200, and after that there will be the point from of the units from where this line will be intersected. This point is basically the point where profit loss is zero, and these units will be known as break even point in units. Break even point in units. Why? Why I've started from 1000? Because business will face the maximum loss, the fixed cost of it, that is it's incurring. So this maximum loss will be the fixed cost from where I have started the graph, and after that, with the passage of time, the loss is being covered, the loss is being recovered. Why? We are selling the units. On every unit we are earning the contributions. Obviously loss will be recovered, but the point from where it will intersect the units, that point will be break even point. So break even point will be 500 units. Now you know that this part is the of the profit part, and this part is loss part. You know that this is the profit, this is the profit. Okay. This from this graph, obviously two things can be tested. Where is profit? You can like profit or loss, you can mention this is the profit and loss. And the where is break even point? This break even point is 500. They can ask you the value of break even point. Again, you don't need to worry about the how the diagram is made. You don't need to make it in the exam. Just understand the concept, understand the logic of the graph. Profit volume graph is ended here. Till here we are done with single product break even analysis. Now break even analysis. Now onward in the next lecture we'll go towards multi product break even analysis, and there is graph there as well, and we'll like complete the chapter in the next class. If you have any question, any doubt, you can ask me on WhatsApp. Meet you guys in the next class. Till then, take care. Bye.